Hi everyone. Thank you for being patient here, for looking after. And we'll talk about the open finance. So basically, this is the next phase of, I would say, open banking that as we are trying to focus upon, how that is going to build upon. I think I'll skip this part, which is known. Yeah. So how do we see the growth, right? Why open finance is required now? How does it looks like, right? So basically, digitization has penetrated into the market, and if you see in the different context, I would say payments, credits, right? Both have been so operational into the digitization that people have adopted it very well, right? We talked about UPI. But I will also stress upon credit part as well. I mean, if you see today, low value credits are also been preferred by the customer. So that is also something which has been picked up very well in the market. So when we talk about the open finance is the next version of open banking. So we talked about the API banking earlier. It's the next phase of API banking where the multiple product or multiple set of, I would say, functionalities or features are built together for the customers to offer the better financial solutions. So that is where we are moving into. So we talk about UPI. Account aggregator is also another important aspect which has come up, right? Because just think about it, giving a credit, say for a low value transaction, that is also based on your maybe say bank statement, would have been a very difficult task for a lender to analyze all the bank statement, finding out what are the basically credits and debits are happening in the account, what is the eligibility that particular customer will build into, and then providing the sanction limit to that customer. So this journey physically looks very tiring. I mean, even from going from the statement and identifying, that is very difficult because each bank will have its own, what I can say, the format of building the statement. So account aggregator also solved that. We had digital lending enabled with account aggregator, so that offers us maybe 10 minutes loan as well in today's date, right? So UPI credit, we touched upon during last discussion also, credit line on UPI. So that has also transformed the experience of overall how the digital is being perceived from the perspective of customer, from the perspective of lender, and from the perspective of network as well. So that is something the journey which we are going through, and which eventually will go into AA 2.0, further move to the the open finance as well. So if we see from the UPI on credit or UPI for credit, these are the QR based payments which we talked about. Those are directly supported by the credit lines. I mean, in today's date, if you see the offerings which are being given by the lender on the credit line on UPI, where you will have to just scan the QR code and you will be able to select your lending option instead of your debit bank account. Yeah, is that simple. I mean, those lines are being utilized and then revolved according to the time as well. So that gives you another leeway to provide more credit-based services to the customer. Although that has been extended to the multiple types of financial institution also. So that is something which is giving them more area to cover and more market to penetrate into. Also the additional part of the discussion point also what we made about is from the adoption, right? How does this get adopted into the large market or large enterprise level or large merchant level also? And it also have very low cost and high, I would say, volume of credit delivery. So typically these transactions have been perceived in a very well, I would say, structured manner. You will have typical transactions which will be starting from different values supported by lenders for the loans as well as multiple financial institutions. So that is something which is also giving better what I can say the channelization for the distribution channels as well. So in earlier panel, if you have attended, Satyajit was talking about it helped them to distribute to the larger set of audiences and larger set of I would say customers along with their partners. I think, yeah. So we generally touched upon it. So how does it work on the UPI credit line, which is the next part of, I would say, the open finance. So typically these are lines, credit lines, which are there on your mobile phone with your UPI app. So there you just have to use it when you are doing the payment. So instead of providing your debit card, you can get direct access to your credit line. And it is that very simple experience and very easy experience for the customers as well to adopt. So what are the advantages which it is bringing to the banks as well, right? So first, you are able to cover up the multiple customers and geographies, right? What I would say UPI has taught the Indian market to be interoperable, right? So that is something which is helping to build more business from the perspective of set of customers as well as multiple geographic, right? There are proper settlement and there are feedback and iteration options as well. Lalit touched upon UDR, right? UDR is also one of the major, I would say, transformation which has happened in the complaint management, so that you can use app itself where you can raise the complaint and get it solved, right? Also the uses of data, the data which is brought into the picture and how that data is being used for the credit, that has helped a lot from the, I would say, product perspective. The customer, I mean, the MVP, metrics are also useful because the way it has been used easily from the perspective of customer, it is widely used for your day-to-day users as well. And definitely it has a commercial plan as well, so you can have opportunity to expand beyond the typical, I would say, the small ticket items to the large transactions as well. So yeah, from the fintechs and lenders perspective, yeah, it's an embedded credit, so you can use it anytime, anywhere as well, and it helps from the perspective of consumer as well as from the merchant as well, because many of the times it's that point, having the access to that credit at that point of time becomes important. So if that is available, it is beneficial for the merchants as well. And typically the data which is being referred here for the underwriting is taken up from the account aggregator as well. So that also helps you to build the structured, to analyze the structured data and build the limits on top of that. Also, it gives the expanded digital distribution, because the, I would say, the part of distribution here is very simplified. So kind of the credit limit is available on your phone at then and there itself, and it's a pre-approved limit, so you don't have to wait for that transaction to happen or any back-end processing to happen. So that is something which is helping a lot, and it's a classic example because it is kind of not just a lending, it's a payment plus lending plus behavioral data uses plus analytics on top of that. So that is something which is a combination of everything, building top of I would say the largest used network rail in the India, or I would say globally as well, real-time payment system perspective. So that is something which is building on the open finance. So we see there are multiple, I would say, use cases being built upon. I mean, apart from what Satyajit and other panelists were talking about, there are use cases which can be seen for the in-store or the offline payments, which we typically call, that is also getting built up upon. And definitely the e-commerce is being the largest consumer of this all over. Yeah, so from the AA perspective, account aggregator perspective, the 2.20 is very promising in that way, because it has firstly the basic problem statement which has been addressed by the AA is the consent management, right? Because the data what you share in the account aggregator is already what you can say consented by the customer, and it's something which has the control from the customer perspective. So that always helps, and that is unified, right? I mean, across all the data types, this has been consumed and pursued upon. Also, it is a structured data, so machine can read it very easily, and it can build the, I will say, analytics on top of that, right? And it has a very transparent as well. I mean, if we see today what we talked about, the account aggregator, the pre-account aggregator era. So the challenges about the bank statement, the transactions, and all those things. So that has been sorted out with the account aggregator. So that helps a lot. And the 2.0 looks after more reliability from the infrastructure perspective, and also it has something which will be able to build the adoption as well on the larger data set. So yeah, what does it cover? It covers banking data, your credit data, as well as insurance, PF, income, GST data. So a lot of use cases related to personal finance management are being built on top of that. Something which is should be looked upon, or should be looking at the future, should be covered is maybe how the consent management happens for the critically, what you can say, different mode of operations account, right? Which can be jointly, or which can be kind of, I would say, current account perspective. So that is something is being looked upon, and being from the adoption perspective as well as from the availability perspective. From the credit perspective, yeah, definitely it will have definite, what you can say, the impact on the credit flow based and real-time underwriting enablement, as well as instant decision making channels as well are being perceived here. And of course, the fraud and the whatever risk management what we were talking about, so that is also would be taken care of that. So this is something which we look after from when we talk about account aggregator, or from the open finance perspective, and the pointers what should be picked up on the credit line on UPI as well. So with this, I thank you for being here, and yeah, thank you. Thanks a lot.